Sacchitanand Uttekar of Tradebulls joins in for a quick chart check and, of course, with his trading ideas as well. Sacchitanand, good afternoon. Thank you for joining in. There was a bit of a dip that got swiftly bought into, but does the texture of the market remain a buy on dips after the kind of fall we witnessed yesterday, or would you want to see further upside for a confirmation of that trend? Part one, and of course, your stock recommendations for the afternoon as well.
Good afternoon, Harmos. Good afternoon, Mangalam. I think the confirmation was already set in yesterday's session. The way Nifty, confidently closed above that 22,000 mark. It, still keeps that hope, clear that there could be a double bottom in place. If you look at today's data, the way Nifty has commenced the day, we saw an initial dip. That dip is also bought in, and the writing at around 22,300 looks like a very stable base. We are expecting that gradually, we may see the Nifty scaling towards 22,800. And that's why we are maintaining a long bias here. If you look at the contribution from Nifty IT, I think that will be very significant. In fact, last week during this show, we highlighted the fact that there could be a sharp decline towards 32,500, where its 50-month exponential moving average support is placed. That particular level has been met, and I think if you look at the way Nifty IT is also recoping, I think a lot of contribution will be there from the IT stocks. So we are expecting that the market texture remains buy on decline, and we may see the Nifty scaling higher towards 22,800 comfortably in a day or so.
All right, 22,800 comfortably in a day or so. That's where we've seen some call buying as well. Sachi, individual stocks, the IT pack is bouncing back. We're seeing some strength in pharma. Bharti Airtel has been resilient as ever, currently at the high point of trade. And Reliance has also picked up. Would any of these interest you from a chart standpoint, or your picks are totally different from these?
Mangalam, I think we have covered a lot of these ideas, but I think the fresh momentum is displayed by IT stocks, and I think HCL Tech has been on our radar. If you look at the overall structure, the structure was a strong low top, low bottom sequence. But if you look at yesterday's price performance, the stock respected its 200 weekly exponential moving average support at around 1,300 very well, and the recovery has eventually led to a bullish hammer formation, which is again a very strong sign of a bottom in place. If you look at the options data, 1,400 call writers were very dominant yesterday. I think they have been pushed back, and that's why we are expecting that there could be a very strong short squeeze in this particular counter. If you look at the data, it is supporting the fact that there could be a rally towards 1470. Eventually, we are expecting the stock to rise towards 1540 in a couple of weeks' time. So that's why we are recommending building long positions here when it comes to HCL Tech. The stop loss can be placed at around 1370 on a closing basis. The first target would be around 1470. Second target would be 1540. The recommendation is given to our clients. This will be a disclosure. Even Bajaj Finance, I think most of the financial stocks are outperforming. And if you look at the performance of Bajaj Finance on the 60 minutes chart, there's a clear-cut breakout from a falling wedge formation. We are expecting that the stock may again, try to attempt its fresh 52-week high, and that's why the reward to risk opportunity is also better. So one can place aggressive long positions here, keeping a stop loss at 8,700 on a closing basis. We may see a swift move towards 90 to 40 within a week's time. So even Bajaj Finance would be one particular counter wherein the trend has been very clear.
All right, Sacchitanand, thank you so much for sparing time joining us today with your views on the index and on specific stocks as well. By the way, the Nifty is now up